Welcome to Lykken on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lykken, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lykken on Lending. Now your host, David Lykken.
Listeners, it is time for another AI update sponsored by Angel AI and our friends Pavan and the company there with Selligence, who is a pioneer in responsible AI, risk-aware decision intelligence for banking and services. In a publication white paper this past week, Angel AI announced a major leap forward in AI governance. In collaboration with our guest today, leading scientist, Professor Arin Brahma, Angel AI has unveiled a cutting-edge, uncertainty-aware machine learning framework designed to eliminate the costly blind spots of traditional AI models. Yes, there are blind spots in the models, and we're going to hear all about it. Dr. Brahma, which you kindly said, please refer to me as Arin. So listeners, I'm not being disrespectful to Dr. Brahma, but he said, call him to Arin. So Arin, welcome to the podcast.
Thanks, David. I appreciate the opportunity, and it's my honor to be at your podcast. Thank you very much.
It's an honor, especially for what you just presented. The paper, I believe, is what I pulled off the press release, was designing a deployable machine learning development framework that operationalizes trustworthy predictive applications in the medical field. And you presented this, is it the Desert 2026 in Münster, Germany? Is that correct? Am I saying that correctly?
That's correct.
Well, very
Perfectly
good.
said.
You know, what I'd love to get, first of all, there's a lot of parallels between finance and the mortgage industry and medical. You go like, our listeners may go scratch their heads. How is that? Well, because decisions that are made in finance or decisions that are made in medical are very critical. You cannot be making mistakes when that. This is not a trial and error scenario. This is a life and death scenario. So we're looking in mortgage finance. It may not be life and death, although when someone thinks they're getting a home and they find out it was misdiagnosed or underwritten, they're not. That can seem like life and death for them. But let's talk a little bit about, in simple terms, what problem were you trying to solve in the medical field? And then let's build a parallel to the mortgage industry.
Thank you for the question. So, yeah, it's a good question because if you read the title of the paper, it looks very complex, almost not intuitive. So it's a great question. I'm happy to have the opportunity to clarify that. So first of all, I want to say that application of this innovation, medical field just being a test case. But the innovation doesn't have a boundary of a medical field. It specifically applies to fields which are very compliance-oriented, life and death sensitive, or financial disaster sensitive, or litigation sensitive, compliance sensitive, regulation sensitive. So it addresses all those kinds of domain. And the innovation was made keeping those in mind. And also trying to understand where the current AI lacks. And that was the motivation behind this. And at the onset, I want to also acknowledge that I'm the first author of this innovation, but there are 3 other co-authors, as it will be printed in the paper. I just acknowledge that.
No, that's good.
Yes. So the problem we're trying to solve is, let's distinguish between the AI, which is used for self-driving cars, or even the chatbots to do conversation, where the job is typically to understand the language and respond back in a natural language. But this all happens in the back end, which today is called, when the decisions are made in the back end by AI engine, today is called agentic AI. Okay, have the jargon for that.
Yes, right.
So this addresses that space of making those decisions, which is now automated using AI algorithms. So it's a good and bad both, right? The automation gives consistency and speed, but then also exposes you to various kinds of risks if the decision is wrong, right? So that is where I think what's going on today versus what this innovation is leading to is different. So let's say how it's done today. So I'm talking about back-end AI, industrial AI. AI models are built using lots of data available. Okay, for example, in our case, we used almost 100,000 actual data of a hospital from pre-COVID to post-COVID period, everything together. Okay. So this data is used to build a model, and then different models are built using various algorithms. And now they are like a competition kind of race to see which algorithm has highest performance. And typically the performance measured is like accuracy, F1 score, and recall. And we talked about sensitivity, specificity, things like that. Okay. That's how it's compared which one wins the race, right?
Right.
So the model with the algorithm that gets the highest performance typically is deployed in the field. Now, what is the problem in this scenario? The problem in this scenario is you use data for last 5 years, and now you deploy it, which new data coming in, which pattern, randomness could be very different. Imagine you built a model for underwriting last 10 years of data, but today a lot of environment things have changed. So when you put the model in the real field, you can't expect all the applications is coming with exactly following the same pattern as the previous 10 years of data. There will be some variations, right? So how is it handled? Is it not addressed today? It is addressed today. What happens? Company rolls on a model and sees where it makes mistakes, collects the data of those errors, tries to reprogram the model again, and releases the next version 6 months later or 1 year later. That's okay, but not okay for the financial service and medical field, because you can't let the model make those errors just to keep improving it. The only way to face these data variations is by collecting the data when it's actually put into practice. So that's a problem, right? So which is called data uncertainty. So could we build a model right off the bat which is aware of these uncertainties before it is actually experimented with in the medical field and the mortgage field or banking, which could be disastrous, could involve litigation, liability, so many things, right? So that was the motivation. And that's a problem we are trying to solve in the fundamentals of how AI is used to make predictions in these kind of domains.
Yeah, it's so fascinating how, even though we're using empirical data that came out of historical records, there's a bias built into that. And that can lead us today to wrong conclusions. Explain the innovation and why it is so groundbreaking. It is groundbreaking because everyone's been relying on AI as if it was factual and this is that, but it's not. So I can't wait to hear your explanation.
AI is fundamentally prediction. It's about having a crystal ball to see the future, right? And we are constantly trying to make the crystal ball better and better and better. And then the decisions are made based on those predictions. Now, if the prediction has a lot of uncertainty built around it, then these automated decisions could be very dangerous. And this innovation addresses that right off the bat. So that's another symptom is that a lot of machine learning or AI models that published by researchers, and we did some survey of the past work, we found almost more than 70 research models that got never implemented in the medical field because practitioners are not very confident on these models because they haven't addressed their concerns. So that was kind of a light bulb went up. These are genuine great models, well-researched models done by, a lot of good researchers. Why are they not being implemented in practice? So that was kind of motivation on that. And we created the foundation of the model is a mathematical computations that actually extracts quantifies the uncertainties in a number and then compares between the traditional performance of models versus uncertainty quantification and kind of do a trade-off between the two. And what we found out for the medical field that the model that are chosen because of high performance, but the uncertainty level is really, really high. So it is better to choose a model with slightly less performance, but more certain.
Yes.
And that really addresses the need for financial services, mortgage, and medical field and similar fields.
Yeah, I'm really interested in your perspective of why AI adoption has been slower than expected in high-stakes areas such as healthcare and mortgage lending.
That's a good question, and actually that's one area we explored in our paper. And we found there's something called trust gap. We call it trust gap.
A trust gap. Interesting.
A trust gap. Yeah, so we define in the paper trust gap to be prediction uncertainty because the uncertainty of prediction is not...
It's traditional uncertainty?
Yes. I mean, uncertainty means how confident the model is. For human beings, same thing. When we make a decision, how confident we are about making a decision. An AI model does nothing except making a decision, right? And the decision is now converted to some kind of action, either by machine or by human being. So the uncertainty part, that means lack of confidence in other words. Okay?
It's a confidence factor that goes into one thing that Jennifer, that works with Pavan, I've had her as a guest numerous times, brilliant, amazing person, as well as Pavan. They talk about probabilistic versus deterministic. So when you're looking at these two, how does your paper relate to this? It sounds like it's more deterministic, but even in deterministic decisions, is there some uncertainty that could be built in there?
Yes. So as not every prediction is probabilistic, but as Angel AI really through the innovation, they move the probabilistic needle to more towards the deterministic side. Okay. So more you can use technology and statistics and mathematics to move that probabilistic needle to more deterministic side, more robust are your decisions. So this is another innovation that is moving the needle from probabilistic to deterministic.
That's really good.
But that every prediction is some probability. Even if as a human being, we make a prediction, are we 100% confident that's going to happen? It may or may not happen. So all decisions about the future, it's somewhat probabilistic. But question is how much we can move the needle more towards deterministic side. That's where technology and innovation research comes in.
Yeah.
And this one contributes to that.
Yeah, it's significant. I mean, what is significant about the Desert to a 2026 conference? Where will this work be published?
The DESRIS is number one conference, international conference for design science researchers.
Okay.
The design science researchers focuses on building artifacts based on research grade innovations and research. So this was a perfect place because we ultimately designed an artifact or actually a framework and a software, to solve this problem. It's not just theory. There are theoretical research versus practical research. So this falls in the practical research aspect of the research, in the domain. So this is number one international conference on that, and it will be published in a journal called LNCS, which is Lecture Notes in Computer Science, which is published by one of the top publishers, Springer.
Springer does that. Okay, good.
Yeah. So it will be published there, probably on its way to be published very soon.
Yeah, I'm thinking, I attend and speak at a lot of conferences myself. And I'm thinking about when you're sitting around at a restaurant or in a bar afterwards and everyone's having shop talk, I can only imagine what this sounds like when you have this caliber of people sitting around talking about this. The research is just amazing what you've done using the data from pediatric hospital, which I found was interesting. Why the pediatric hospital? So does this mean Angel AI is not just for mortgages?
Absolutely. Angel AI is a very scalable, very robust platform, and it gets data and produces some action. And Angel AI, entire software, entire platform can apply to any domain. So right now it is being financial services domain, but it is absolutely baked for any domain, especially domains which is sensitive to regulations, compliance, things like that.
So how did you connect with Pavan? I'm always interested in how these connections happen. I mean, I met Pavan when he was 11 years old by doing business with his dad, and now we're intricately involved in each other and what we're doing together. It's just so fun to see how these connections started. How did you meet Pavan, or did Pavan seek you out based on this knowledge? This paper?
Very interesting history. Again, I know Pavan almost more than 20 years back.
Wow.
And I was working, before becoming a professor and having a PhD, I was a technology consultant, almost 20 years in my life. And during that time, I was working for a mortgage automation software company. And
were you?
I went to yes. And I co-founded a company actually, which automates mortgage. So that time mortgage was so paper intensive. Our mission is to convert everything to digital processing so that it can be done from any location. It doesn't have to be in one single office. So that was a platform that I developed, and the company was founded based on that. So I went to a conference, and Pavan had a booth in the conference showing off his LOS system. So we got acquainted, and it happens to be he's from Southern California, and happens to be from Cerritos, and I was from Southern California as well. So we made the connection that we actually worked together using his LOS platform to be integrated with our servicing, our mortgage originations platform, which can be digital platform, which can be used to do processing from any location. So, that's how relationship started, and I only agree.
Yeah. Well, and I listen to Pavan and I just stand there. I don't even, sometimes my brain just cramps as I'm listening to talk about his vision and things like that. But I'm so glad that you two have partnered on this, because what we're trying to solve here is so critical, especially in the medical field, but I think equally so in the financial world. We need to have financial certainty. We cannot be dealing with uncertainty. And the more certain it is, like what Pavan's vision is to take it further down to the unbanked, bring it to the people that do not have access to financing for reasons where some level of uncertainty exists in their credit profile. I'm really interested in intuition. What does it mean for AI to have intuition? And is that even possible?
Good question. And as soon as you talk intuition, those kind of thoughts comes to our mind, because we always compare machine with the human capability, right? Now, I want to clarify that it should not be confused with like human emotion or guesswork or mysterious gut feel. That's not what we're talking about. We are talking about a structured ability that has been mathematically derived and implemented, which can recognize patterns. Also, it can recognize the reliability of those patterns. For example, typically machines or, ML models or AI models does a prediction and gets some kind of confidence about that particular decision, right? Human being will also make decision. Underwriter will make a decision, but at the gut feel, although decisions is based on the applicant's records and all those things, still there's a question: am I still making a right decision? Should I deny the loan? Even though math is working out, right? So that comes from experience, right? Which is very valuable. Underwriters experience not just with the numbers and trade scores of the applicant, right? So far, AI model has not been addressing that. AI model also crunching numbers, the patterns, and making a decision.
Right.
But what is new right now is the AI models right now can also mathematically try to understand that should I not approve this, right? If in case the real of data variation is a lot more than what I was trained on. See, so far, AI models make decisions based on what is trained on. But now we are making decisions what is trained on plus the possible data variation that can happen.
Yeah.
Which is bound to happen in the future. So that moves the needle from probabilistic to more deterministic.
Yeah, that is so fascinating. I'm a DE underwriter, direct endorsed underwriter for the government. So I know what you're talking about when you're talking about that gut feeling. You have all the facts before you, and the facts may be saying decline this loan, but you look at it and you go, my gut is telling me. And I think that I love studying brain science. I think that comes from the limbic side of the brain. The question is, I thought that was an intuitive side, but now we're learning more and more that facts, more the subtleties of the facts are going into that limbic side where we say, I have a gut. You can't explain why, but you just feel this is a good loan and it should be done. And that's what I get so excited about, is not doing irresponsible loans or taking unfair medical risks. And I'm more interested in including more people in home ownership or getting them medical procedures that will work for them that were being left out. And I'm really fascinated about you helping us understand the gut feeling decision-making process of underwriting and how AI is going to improve on that. Fascinating topic.
And also, as you pointed rightly, David, because you have so much experience on underwriting yourself, it has fair lending, because although a senior underwriter's experience is a gold standard, because as you said, even though all the data lines up, still you might have a gut feel to accept or reject the loan, right? But it can be human, it can be inconsistent. Right? There could be bias. Today you're in a good mood, good health. Maybe your decisions are all good. Tomorrow, maybe you're under the weather and not in a great mood. It could be, Also, there could be, bias based on a specific type of loans that has been always being processed, right? So now that can be taken over by AI to make it more consistent and fair. So I think it has huge impact on fair lending itself. And I think Pavan is always very, very mindful about making his platform very much, fair lending oriented. So it's a perfect fit for Angel AI. Yes.
Yeah, Angel AI being fair lending. It's just so amazing that you had some background in mortgage lending. I'm sitting here just thinking, that's probably one of the aha moments of this whole interview is you're writing papers now that's being read at the medical conferences, and now or AI conferences. How is Angel AI applying this framework in the TLM architecture?
Publication. I published 2 more papers in A-star journals using in the mortgage field.
Okay.
So yeah. And those are done in collaboration with Angel AI. They are, and Pawan's data, mortgage data, and everything. So, I wrote those papers based on his data and his problems.
Really?
So yes. So 2 other paper, if you search on internet, you'll find 2 other publications specifically in mortgage area.
What Pavan refers to as TML architecture.
Yes. So TLM stands for transactional language model.
Yeah.
So which basically means forget about language understanding in a transactional field where approving a loan and updating someone's bank statement or bank account you can have an error on that, right? So it is very transactional in nature. The margin of error has to be very, very low, right? So Angel AI has autonomous cells, which are basically AI agents, which make sequence of decisions in the TLM architecture. Now, each of these cells are trained using some kind of ML or AI algorithms. So now they are using this new innovation to also, again, move the needle from probabilistic to deterministic by incorporating the uncertainty aspect of that, which is going to make it even more robust in terms of making more deterministic. So that's how Angel AI is using it in the back end with all the AI agents that comprises the Angel AI TLM platform.
Yeah. The whole concept of the cells that is woodworking is so brilliant the way this has been designed. And the more I learn about it, the more I guess stand in awe of this whole technology. Why do you think this is so important to fair lending? It's almost a rhetorical question, but I want to make sure our listeners understand that.
Yeah. So fair lending, a approval or a decision cannot be just accurate. It got to be accurate, but it has to be consistent, it has to be explainable, and it has to be auditable, right? Just making a correct decision does not meet the standards of fair lending. So what it is doing, whatever decision AI makes, it is recordable. For example, a human, or it can be auditable. When a human underwriter makes a decision through intuition, it is not recorded. There is no audit trail. Right? A decision could be a great decision, but it is not recorded track. So here, any decision AI makes all traceable, and that's why it is inauditable, and it's based on
that. Traceable. That is really a key, especially when it comes to the compliance part of this thing. When you're defending a decision you made that may be being challenged by fair lending, the fact that it's traceable, verifiable, confirmable. I mean, Jennifer was talking about that in the recent interview that we did. It's fascinating.
If, for example, a loan got denied, right? And 2 months later, you get sued because the borrower feels that it was subject to some kind of bias, should not have. So you have to be able to trace that. You have to be able to reproduce the same situation, same decision again, right? And it has to be consistent with other borrowers. So imagine if it is all decisions are made by human being to every step of the way, how hard it would be. AI makes it traceable, reproducible, and makes it consistent. So it's a kind of, it's a gift to fair lending paradigm, that all these things can be done right now.
It should take a lot of those people that work in the compliance department or the business owners who are really the ones standing on the risk line with their personal net worth and their corporate net worth. It gives them much relief, and they should be paying attention to this. Listeners, I'm telling you, understand the importance of a deterministic, traceable, verifiable, and taking out as much of the uncertainty as possible out of these decisions. It's really important. One of the things I love about Pavan, he is protecting his inventions through patents, as we all should. There's nothing wrong with that. But what does this mean for Angel-I's moat? We're talking about a castle, a moat going around and protecting it.
Yeah. A good question. So I believe the moat doesn't come from just filing for a patent or even getting a patent. A lot of companies, files patent, innovation happens, never applied,
Right.
But what is different in Angel AI that, all this innovation that is being patent, being filed for patent are actually implemented within the system. So it is more about how Angel AI gung-ho about implementing the innovation than just apply for patent. Yes, patent secures your right, but actual more lies in the implementation of those patented ideas. So I think that's where Angel AI stands out to be.
Dr. Arin, this is so fascinating. If this works as intended, what changes for lenders, borrowers, and for the mortgage industry? What does this mean? What is it going to be there?
I would say there is a kind of gold rush or a craze to use AI wherever is possible. But I think the decision maker, executives, and the CEOs, they should drill down a little bit more detail and see the uncertainty aspect has been taken care of or not. Reproducibility had been addressed during the design or development or not. So those needs to, before they, just blindly automate. And there are so many model options these days. There's plenty of options for you to choose a model from. But they should definitely strike a balance between the prediction accuracy and how much uncertainty has been addressed in the design.
So good.
Just the best performing model may not be good if the uncertainty aspect has not been taken care of the way this framework innovation does. So there's a trap there. So my few words would be to be mindful of those decisions.
Yeah, that's so good. Well, I hope you will come back and do more in the mortgage space after you're finished transforming the medical space. The last question I have is, what is the one thing mortgage executives should remember from this research, from your research?
Uncertainty. Because no matter how much you rely and believe on this magical prediction of AI, there are uncertainties involved. And those uncertainties, if the model design development doesn't include those uncertainty management, then those models, no matter how good it sounds, are highly risky. And I think, risk aware or domains that is very vulnerable to risk and compliance, that becomes more important, managing uncertainty, than the prediction accuracy itself. So that's what, my takeaway would be for the executives.
Yeah, I can't wait to have you back as a guest again to talk about new papers you're publishing. I got a feeling that there's a lot more that's going to be gone. When I was on Facebook I was watching professors of yours that you've had congratulating you on your research and the publication of this. You're making a lot of people that have helped and contribute to your education proud, and I'm just an honor to have you here, Arin, to be part of this and giving some new insights. We definitely would love to have you back. Let us know when you're publishing. Pavan will probably tell me about it, but next time you publish something, we want to learn about it and learn how these two worlds, the medical and the mortgage, actually relate, other than there's two M's in the word.
I appreciate, and I will be very happy and honored to be in your podcast again. Thanks for the opportunity. And mortgage, I am very passionate about the mortgage industry because I had been 20 years of experience on that. And I have been working with Pavan's team on the Angel AI in terms of, different all of designs and innovation itself. So I am probably worked more on the mortgage than medical field so far. So definitely my future publications will be on the mortgage area as well. So it'll be a pleasure to come back to you and talk about them.
I can't wait to learn more. We'll be hearing more from you, I've got a feeling. Congratulations on your success on this paper. And again, what you're doing in the medical field. And we welcome you back to the mortgage anytime you get ready. Good to have you with us. Have a wonderful time. Thanks for making time today.
Thank you. Thanks, David. Likewise.
Folks, I hope you enjoyed this podcast that has been sponsored by Angel AI. You say, well, this is all AI, you're helping them with their marketing. Where we're trying to do more than anything else with this AI updates, listeners, is to educate you on what is going into AI. A lot of us are trusting it a bit more than we probably should. It's important to understand the difference between probabilistic determinations versus deterministic decisions that it's making, and also look more what's going into it. This is a significant paper. You can read this paper, and listeners, you can download and read Dr. Arin Brahma's paper that we've talked about in this interview today. I encourage you to do so and share it with those that are developing your systems for the future. Thank you for being here. A special thank you to Angel AI for making this possible. Have a great day. Look forward to having you back for another podcast.
You've been listening to Lykken on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lykken on Lending.